Gold prices are back over $1,800 an ounce in US dollars, despite the dollar index getting to almost 93. I think one of the main reasons is that the VIX is starting to pop. People are starting to get worried. We had a big pop in the VIX on Monday, July 19th. So normally when the VIX spikes like that, it starts to worry people. So a lot of people are probably copying what Goldman Sachs has done. And no, Goldman Sachs is not sector rotating. Stocks and bonds are very heavily correlated since 2009. In the past, this was not the case. However, since the 2008 financial crisis, sector rotation, traditional sector rotation, where stocks and bonds used to be non-correlated assets, that has changed an enormous amount. Now, large corporations for the last 10, 15, 20 years, and you could see this in the correlations, it's just gotten more and more and more correlated, especially since the 2008 financial crisis. The more investment-grade corporate bonds and junk bonds that these large corporations in the S&P 500 sell, especially to do share buybacks and leverage buyouts, the higher their share prices can go, especially with the earnings games that they get to play with Wall Street analysts to lower the bar on revenue beats and earnings beats. So gold prices are back over 1,800. But what I really wanted to talk about is that governments and central banks that have not bought physical gold in 10, 15, 20 years, sometimes longer, are buying large tonnage orders. So these are not small orders of physical gold. These are 10, 20, 30, 40, sometimes even more than 40 tons in a single month of physical gold starting in January. And so we've been seeing out of countries in Eastern Europe, whether that's Hungary and Poland, you've seen big increases in Eastern European countries. Russia also announced that they wanted to buy even more physical gold. They've been pre-announcing it. And then also out of Asia, whether that's the Bank of Thailand, and Thailand is not a particularly large country. They bought 90.2 tons of physical gold in April and May. The newest data that we just got from the IMF was that the Central Bank of Brazil bought 41.8 tons of physical gold, adding to its reserves in June. They increased their gold reserves by over 50%. I think it was a 52% increase. This is Brazil's largest monthly purchase of physical gold since January 1999. We are seeing countries that have not bought physical gold, especially large tonnage orders, in 10, 15, 20 years or longer, buying large tonnage orders. Now, I think there's a couple main reasons for this. It's not all Basel III. It's also hedging to diversify either away from the US dollar, getting out of dollar reserves, and this has been a trend, getting out of dollar reserves for the last 10, 12 months now. There's been articles coming out from a number of publications talking about how dollar reserves at the end of 2020 were at 25-year lows, but also hedging against fiat currencies in general, because it's not just the US government doing it. You're seeing the central bank balance sheets of a lot of these major countries, whether that's the European Central Bank, many other countries in the G7 or non-G7, all trying to stagflate, tax lie, and beggar thy neighbor monetary and trade policies. These central bank balance sheets have drastically expanded in the last 18 months. So physical gold demand in tonnage, large tonnage orders, not a couple tons. We're talking 40 tons here in a single month, over 40 tons. Those are large orders from Bank of Thailand and Brazil. So countries that have not bought gold in a very, very long time are buying physical gold. Now, I'm sure we're going to get a couple trolls in the comment section bring up this question. Now, why hasn't the paper gold price gone way, way higher? Well, the answer to that is actually very simple. The Bank of International Settlements and the bullion banks have over $1 trillion worth of gold derivatives. So the Bank of International Settlements used to have this mentioned on their website. It is gone. Zero Hedge, a number of years ago, outed the Bank of International Settlements for their gold derivatives trading, and they removed it from their website. However, Zero Hedge also took screenshots of derivatives traders, gold derivatives traders, listing this on their job profiles on LinkedIn. So there's still anecdotal proof that the Bank of International Settlements and the bullion banks they're coordinating are helping manage the gold price. In fact, the Bank of International Settlements probably needed to help smash the gold price just to help fill these large tonnage orders. So that probably prevented these enormous tonnage orders of physical gold. That probably prevented the paper gold price in US dollars from rising so they could fill these orders for these governments at lower prices. So now that we've had these large purchases in hindsight, unless these governments keep buying, and the survey data is showing that the governments do want to keep buying and accumulating gold. I think over 50% of the central banks surveyed in a recent World Gold Council survey said that they do want to accumulate physical gold this year and next year. So these large tonnage orders actually, in the short term, they don't drive up the paper price. The bullion banks and the Bank of International Settlements use that as an excuse to smash the paper price, normally with derivatives, to help fill orders for physical demand. Unfortunately, having been in gold and silver and covering gold and silver for over a decade now, I've seen this all the time. Whenever there is very, very large orders, the paper price actually can get smashed. So if there's large tonnage orders, unless it's the Sprott Physical Silver Trust, which I think the Sprott Physical Silver Trust should go and spend whatever's left of that $4 billion shelf offering. They should go and buy physical silver now. It might take months to get it delivered. They should go and sell those units and go and buy billions of dollars worth of physical silver now. So to wrap up this short little video, I think it is a good sign that despite the dollar rallying to almost 93 in the dollar index, despite the VIX spiking, that paper gold prices are not showing weakness right now. They are pretty strongly above $1,800 an ounce. So I think that's good for gold. And we are seeing from a fundamental standpoint that central banks are enormous net buyers. Now, these are out of the G7. See, these are non-G7 countries. They are enormous buyers of physical gold. These are not tiny little orders. These are 10, 20, 30, 40 tons per month orders, tonnage, from countries that have not bought physical gold in at least 1 or 2 decades. So if this trend continues over the next couple years, this will be very, very good for the gold price, but do not be surprised if the paper price does get smashed occasionally to fill these large tonnage orders. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content, research, financial education, and analysis than I can provide in these short little free videos, there is over 170 articles, charts, and audio podcasts behind the paywall, including 18 new articles out in the last 7 or so weeks on a lot of interesting topics about global macro companies and sectors. Very, very in-depth articles on gold mining, silver mining, royalty and streaming companies, oil companies, global macro, including why the dollar index is stuck in a 6-year trading range. It's a lot more complicated than you'll hear global macro experts like David Hunter and others talk about. It is only $5 a month to become a patron, the cost of a mediocre cup of coffee. I think it is one of the best deals out there. I charge less than anyone else in my space for premium content. If you don't like it, you can always cancel, although I think you're really going to like it. And if you're already a patron, thank you very much. I really appreciate it, because YouTube does not pay the bills. No matter how many YouTube videos I make, it would never be enough to pay my bills, because YouTube wants to make sure my channel doesn't grow and I can't make a living off any ad revenues on my channel. So thanks for listening. If I could wrap up this short little video in 1 more minute here, the bottom line is you are seeing countries buy enormous tonnage orders of physical gold that have not bought physical gold in 10, 15, 20 years or longer. This is a good sign over the long run, over the next couple years for the gold price. In the short term, the Bank of International Settlements and the bullion banks may smash the gold price in the short term using derivatives. So if you are a short-term trader, there's still going to be volatility in the gold price. These news stories about enormous tonnage orders do not guarantee in the short term that the gold price is going to go up. However, over the next 12, 18, 24 months, if this trend continues with central bank buying enormous tonnage, this is going to put a strain on mine supply. The central banks may want all the global gold mining supply to put into their vaults, and the odds of a lot of new gold mines coming online in the next 18 to 24 months are not very high unless the gold price goes well above $2,000 an ounce, especially with the cost to build a new mine going up in the last 6 to 10 months.